Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to do our daily technical analysis update of commodities. We're going to get in there, look at the dollar, the relative strength DXY. We'll go through the 10 and 30-year yields, the precious metals, and then all the other commodities that I follow. I'll give you my financial opinion, and if you guys need any help in navigating these commodity markets, definitely sign up for the Platinum membership in the finding-value.com. Sign up. We have a Sunday, 5 p.m. Eastern Standard Time, or Mountain Standard Time. Sunday, 5 p.m. Mountain Standard Time. Question and answer session for the Platinum members. You can come and ask questions. Feel free to join the community and ask any question you want. You can ask questions that you think are stupid. Doesn't matter. I'm there to help you guys out. We have a lot of good discussion around a lot of different things. Macro, individual companies. We go into sectors. Is this sector good? What do you see? What about the ratios? Well, how is this sector performing against other sectors? We can cover it all if you've got questions. Physical metals, where to buy physical metals? What metal should I be looking at or take into consideration and why? I can't give advice, but I can tell you what I'm doing and what I'm looking at. So let's dive in here. Let's show you what I'm looking at and what I'm seeing in the markets. So this is the DXY. It's a relative strength of the dollar against other currencies. Now, the question that we've had is this dollar going to fall and give us a big tailwind? Tailwind is what pushes our investments from the back. We've been swimming upstream in our commodities in the first half of the bull market as money rotates into the dollar, sells off of bonds, sells off in stocks, and rotates into the dollar. We've seen relative weakness in other currencies because their currencies have undergone problems in their economies and whatnot. Energy crises and other highly inflationary problems in their currencies. Now, it looks like that those problems could be transferring to the dollar. If we look at last bull market, and it's important to understand this, guys, it is incredibly important. Last bull market, we had a surge in the dollar higher. We hit a peak, and then the rest of the bull market, we went lower. Think of that as the cycle. Increasing interest rates, a slowing of those increasing interest rates. The dollar being stronger in the beginning of the bull market and weaker towards the back half of the bull market. It's a cycle. And I think what's happening is we've got that strength in the beginning of the bull market. And I think this will turn around and head lower at some point. Is that point this second? You know, I don't know the future. I don't want to pretend like I know the future. But we're seeing signs where we've got large selling pressure, smaller buying pressure, and it's being persistent. Oops. It's being persistent. And now we've got another large whack of the hammer right on the forehead of the dollar. Down 2% today. That is a big move. So we're seeing this hammer come out. It is hammering the dollar lower. It hits it, and then the buyers try to bring it back up. Hammered here, they come back up. Hammered here, and then it comes back up. And then another massive hammer today. The sellers are hammering this thing, and I think what's going to happen is that we're going to see this roll over and head lower. That's my take on it. It doesn't mean it has to happen tomorrow or the next trading day. What it means is that this is putting in a topping structure, possibly, by looking at the size of the downward candlesticks in relationship to the size of the upward candlesticks. It's that hammering that turns this thing over. And that's what we're seeing in the dollar. This is a tailwind to our commodities. We also are seeing that the 10 and 30-year yield are remaining resilient. Inflation expectations are still there, and we're heading higher in the yields. That means bonds are selling off. Yields higher, bonds sell off. Yields higher in the 10-year, up 0.78%, bond prices selling off. We also have the 30-year yield bouncing, using its legs and bouncing off that support line to the upside, up 3%. This here is a good setup for commodities in general. What this means is that people are selling bonds. We can see that in the prices. If you just look at the prices, people are selling bonds. They don't want anything to do with bonds. It's heading lower. And we're also seeing the yields. I mean, yields going up is also going to impact stocks. It doesn't mean that stocks have to go lower. It just means that I think there'll be an outperformance of commodities over stocks. Stocks will go sideways to lower. That's kind of what I'm thinking. So when we look at this, we've got a backdrop of weaker dollar, higher yields. That should be positive for a lot of commodities. Looking at the commodity index, we are recapturing our support trend line. We are coming back above it. Nice, strong move today, up 3.3%. That is the long-term trend line that's going up, which is quite vertical. And this could be, and I don't know if it is, I think it is, but I don't want to stick my neck out too much. This could be the start of another big leg higher. Why? Why is this going to be a big leg higher? Well, the Strategic Petroleum Reserve that was keeping that oil price down is going to start coming in vengeance. China's reopening their economy. That combination could be quite good for commodities. The reopening of China, the stopping of the release of the SPR. We are going to get the Freeport Terminal LNG facility will come back online here at some point, probably at the end of this month. And then I think Russian oil is going to be down on supply. That combination is going to support commodity prices to the upside. Looking at the CRB to S&P 500, I don't know if this is updated. It's basically flat today for the day. So we had commodities up and the S&P 500 up as well. Looking at gold, gold had a massive day today. Lots of buying pressure. We know the premiums over in the physical market are massive right now. And we've talked about it with Scott. We've talked about it with a lot of people. His opinion is that those premiums and the paper price are going to converge and paper price is going to move violently. That could be true. And this is good buying pressure. Remember when we look for the candlesticks, big candlesticks up, the small sell-off pressure, big candlestick up, small selling pressure, big candlestick up. And at some point, this thing could rip it. And it's ripping it today. Now, is this thing going to go straight higher? No, we could have a little bloody nose next trading session, which is a small profit-taking day, and it could take some time to break through it. But the big force is behind this. The hammer is hitting this higher. And it's only small little hammers going back down. We're seeing more buying pressure, less selling pressure is what I'm trying to say. It looks fantastic. Silver also getting out the whooping stick. Killing it higher today, up 7%, up to $21 almost. Very big move, and we could see this start to take off at any second here. Again, it may not be the next trading day. We could get a small down little candlestick, the bloody nose, and then the rip higher. And I'm not projecting that. I'm just saying it could happen. I don't know the path necessarily. Platinum also joining in on the fun, up 4.86%, killing it today. So platinum's looking absolutely fantastic. Take a big picture view, consolidation period here. We've got a breakout out of that consolidation period. We've got a nice ABC correction, and I think we're going to the motherland. Not straight higher. It could go up quite dramatically in a quick period of time, but it looks very good from a monthly candlestick perspective. XAU to gold ratio. This is the ratio telling us if we should be in the gold mining companies versus gold. Massive outperformance today. I saw a lot of very big moves in the gold and silver mining companies. So could this be the beginning of a very big move? Yes, it could. We still need to break this downtrend line, break above it, and then I think we're going to have boost mode engaged. GDX up today quite substantially, 10% in a day. That's looking really good. We are in this support zone. Again, I like buying in support zones. And we're right on that resistance support area that we have to get through there. But it looks a lot better than what it did. Looking a lot more positive. SILJ also bouncing off support, going to the upside. Massive day today, 9.85%. Looking quite good. Broken chart pattern, going sideways, and then we're going to see a move most likely higher after this consolidation of this area is done. And it could be a violent move. It may not. We'll see what happens. Crude oil also killing it. Weaker dollar, increasing interest rates. Keep that in the back of your mind. Downtrend line break. Step 1. Step 2 is a higher low. And now we want to break the higher high. That is a new uptrend as we break through this and move higher. We haven't broken through it yet, but it looks promising. I like the momentum, and it also strong, very close. It also had a very strong closing at the end of the day. Natural gas also busting higher, 8.22%. Bullish engulfing. Like I said yesterday, we were setting up a pattern of a flag, which is a continuation pattern to the upside. We're breaking that to the upside. Looks very good. XOP, yeah, you know me. It went higher, gapped higher, and we were kind of lower throughout the day. Confusing how XOP and OIH are trading in relationship to the physical commodities, oil and natural gas. I do think this is going to go higher. I think it's positioned very well on a long-term perspective to do some very big moves. We are still under a large resistance area, and we got to break through that, and I think that's what we're trying to do. Once we get through that, sky's the limit, baby. OIH also breaking higher today, 2.17%. Not as much momentum as I thought it would have, given the size of the move in crude and natural gas. But we do have some resistance coming through here. We've still got to get through it. It's probably some sellers out there. And I don't know why you'd be selling at this price, but you know what? It is what it is. We've got uranium. So uranium, I think, is caught in an identity crisis. What does that mean? It's trying to figure out if it's an energy sector or if it's tied to the technology sector. We are still going to break apart, and we're trying to. We're down a little bit today in the futures pricing, or that might have been yesterday. I don't know if this is a day delayed, but we are down a little bit. And everything looks good. There's nothing wrong with it. Everything still looks all right. Sprott Physical Uranium Trust adding some upward movement, but we're not getting those long, big up moves, kind of like gold, silver, crude oil, natural gas, and that. It still has some time, and we're going to turn this thing around, hopefully. Uranium, I think, is still an incredible sector. Still looks good. It's just not as strong as some of the other sectors at the moment. URNM also heading higher, following a lot of the other commodity stocks. But I also think that it still has a little bit of ties to its sister or brother, which is kind of the technology companies like NASDAQ and whatnot, and Bitcoin as well. So I think eventually this thing will break apart and it's going to make a big run. But right now, this isn't as strong as I'd like to see, but it still looks good. Looking at TAN, TAN getting a little bit more selling pressure today. It tried to run, but the momentum's heading to the downside. I don't know if it likes those increasing interest rates. But if you look at it from a charting perspective, still looks strong for a move to the upside. It does have some energy ties to it. Now, copper, this is COPX, the ETF. Copper's looking fantastic, guys. It ripped it today. China coming out with the reopening news. Remember, we were at support. It was just bouncing sideways, and now we're breaking out to the upside. I think copper and the diversified mining companies look pretty good. Again, if you're part of the Platinum channel, you know the copper miners and diversified miners that I really like. Lithium also heading higher today, moonshotting 5%. So that's looking a little bit better for lithium. Rare earth metals. I think rare earths are very highly tied to the precious metal sector, as weird as it is. But that's launching today, 8.5%. And it looks really good. We're bouncing off the support region, which is down here. We've got the S&P 500. It is higher today, but not as, we'll say not as large of a move as, say, some of the commodities, but it is higher. It is bouncing off some support for the S&P 500, and also that's the same for the composite index, which is getting a little hammer candlestick. And hopefully we can all go higher together. It's just the commodities, I think, will outrun it. EEM is loving that weaker dollar. It is moonshot and higher. I talked about it yesterday about the dollar being up, but there was strength in emerging markets, almost as if there's that divergence where we could head on higher. And we head higher today, up 4.23%. This could be the beginning of a very big move in EEM. Because the dollar, if the dollar heads lower, I think EEM is sitting in a very good position of kind of breaking this downtrend here, where we could get moving. Remember, we could do a back test a little bit here before moving on higher. XHB also following the overall markets. Higher today, up 2%. Again, we've got a broken downtrend. It's moving sideways, and usually the next move is higher. Moo also following that same sort of setup, broken downtrend, a little bit lower on the double bottom almost, and it was higher today, up 1.61%. Copper price in terms of future pricing looks excellent. Breakout today. Very nice looking for copper. If you're interested in copper companies, I would be looking at them now. We very well could do a return move, retest that, and break higher. This is your opportunity. And if you guys want ideas, platinum membership at the website. If you guys want ideas, join the community. Lumber also doing a full retest. We'll see if we get support here and start to head higher. That looks good for a move on up, not down. Then we've got iron ore. Iron ore, with China coming out with that news, I suspect that iron ore is going to head higher. And this could be a false breakdown. We have a declining wedge over here, and this could be a false breakdown to the downside and reverse higher. So that could be the case. Remember, I don't have the crystal ball, but what we're looking for is ideas and a way to look at something. I'm looking for this to go higher. Why? Because China's reopening. And we've got falling wedges in here. Aluminum also, I think, will go get some support here and go higher because we're at support. There's ideas around that and investments that we can make. And then we've got Baltic Dry Index. It was slightly lower today, down 2.35%. I think eventually this will work its way back on up, but it will take some time. It's not immediate. And then we've got coal futures also heading a little bit lower. We have a pattern that kind of came up, broke back down. I do think it will come and reverse higher over time. I don't think this is going to just go down and be a bubble. I don't think that, when you compare it to other patterns in history. So that's what I've got for today, guys. And again, we've got 5 p.m. Mountain Standard Time platinum membership question and answer session. And if you guys like this content, obviously give me a thumbs up, subscribe to the channel, and you guys can get these weekly update or daily updates. And then we do the weekly calls on the weekend for any members. I also do midweek updates on companies that I'm watching, companies that I'm seeing. And overall, guys, is this a turning point where we could launch and just move to the moon? Very well could be. Why do I think that? Weaker dollar, increasing interest rates. This is kind of like the second stage, usually, of a bull market in commodities. I've been looking for this weaker dollar, been waiting. And what do we have here? We have a weaker dollar, and it's not just the dollar. We saw kind of, I call it pan buying or buying across the entire sector of commodities. We're seeing stronger copper. We're seeing stronger rare earth metals, stronger precious metals, stronger crude. It's not just contained to one area. It's a combination of the picture that's being created and being displayed to us. It's information that we should be looking at. And that information is saying, hey, look, maybe we've got a top in the dollar here. Maybe these commodities are going to start moving with this large tailwind with the dollar going down. Is that going to be the case? We're going to have to find out. It looks like it. with the size of the buying pressure that we're seeing across the board and the selling pressure in the DXY, it looks like it. We'll see. I'm positioned for it. Why am I positioned for it? Because everything's in alignment. Expansionary phase of real estate. Yeah, interest rates are slowing it down. I get it. But it's still there. That supply demand is still there. The inflation's still in the system. And now the dollar's starting to weaken a little bit. That's good. We'll just have to see if it continues. All right, guys, that's all I've got for today. Hopefully you guys had a good day, and we'll catch you next time. This is Finding Value.